Understanding recourse and non-recourse loans secured against lease standby letters of credit, SBLC. In the intricate landscape of financial transactions, recourse and non-recourse loans secured against a lease standby letter of credit provide distinct avenues for businesses seeking capital. This video delves into the nuances of these financing options, shedding light on the differences, advantages, and considerations associated with recourse and non-recourse loans tied to leased SBLCs. Recourse loans. A closer look. Recourse loans are financial agreements where the borrower remains personally liable for the repayment of the loan. In the context of loans secured against a leased SBLC, this means that in the event of default, the lender can not only claim the collateralized SBLC, but also pursue additional assets owned by the borrower to recover the outstanding amount. Advantages of recourse loans. Lower interest rates. Since recourse loans pose less risk to lenders, they typically come with lower interest rates, making them an attractive option for borrowers with strong creditworthiness. Flexible terms. Lenders may offer more flexible terms and conditions with recourse loans, providing borrowers with greater negotiating power. Broader access. Recourse loans may be more accessible to a wider range of borrowers, including those with varying credit histories. Considerations for recourse loans. Personal liability. Borrowers should be aware that in the case of default, their personal assets may be at risk. This places a higher level of responsibility on the borrower to fulfill the loan obligations. Creditworthiness matters. Lenders may scrutinize the borrower's credit history and financial stability more rigorously in recourse loan arrangements. Non-recourse loans. An overview. Non-recourse loans, on the other hand, limit the lender's recourse to the collateralized assets, in this case, the leased SBLC. If the borrower defaults, the lender can only claim the specified collateral and cannot pursue the borrower's personal assets. Advantages of non-recourse loans. Limited personal liability. Borrowers are shielded from personal liability beyond the collateralized assets. This minimizes the risk of personal financial repercussions in the event of default. Asset protection. Non-recourse loans provide a level of asset protection for borrowers, as only the specified collateral is at risk in case of default. Risk mitigation. Non-recourse loans are often seen as a risk mitigation strategy for borrowers, especially when dealing with complex financial transactions. Considerations for non-recourse loans. Higher interest rates. Due to the increased risk for lenders, non-recourse loans may come with higher interest rates compared to recourse loans. Stricter eligibility criteria. Lenders may impose stricter eligibility criteria, requiring thorough evaluation of the leased SBLC and the overall financial standing of the borrower. Lease standby letter of credit in the equation. A standby letter of credit serves as a crucial element in both recourse and non-recourse loan scenarios. It acts as collateral, offering assurance to the lender that funds will be available to cover the outstanding amount in the event of default. Key considerations for leased SBLCs. Validity and authenticity. Ensuring the leased SBLC is valid, authentic, and meets the required standards is essential for both borrowers and lenders. Clear terms and conditions. The terms and conditions of the leased SBLC should be clearly defined to avoid disputes and ensure smooth transactions between the parties involved. Due diligence. Both parties should conduct thorough due diligence on the SBLC provider, ensuring credibility and adherence to industry standards. Conclusion. In conclusion, the choice between recourse and non-recourse loans secured against a lease standby letter of credit hinges on various factors, including the borrower's risk tolerance, creditworthiness, and the desired level of personal liability. Whether opting for the added security of a recourse loan or the limited personal liability offered by a non-recourse loan, businesses engaging in such financial transactions must carefully weigh the advantages and considerations associated with each option. Additionally, a comprehensive understanding of the terms and conditions of the leased SBLC is paramount to the success and security of these financial arrangements.